Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today was a pretty ugly day, actually. Came in, futures were up like 4 or 5 handles. There was some news that the ECB will give Spain some money ahead of schedule to help with those yields. Then like some bad news just kept trickling in. One was that Monty doesn't want to be revoted back or whatever the procedure is there. Another one out of Germany saying it's going to take 3 months to vote on what could be the emergency ESM. And then you had CMI pre-announced, you had Clack come out with bad news. Like all in all, you know, bad news just kept coming in the same way bad news has been coming in for about a week and a half. So it's only so much a market could absorb. You know, so anyway, we gapped up, and you know, I came in that long, and I pretty much got somewhat lucky that we gapped up into resistance in a lot of the things that I was holding because I was able to sell and get out of the way and not try and catch a falling knife. So with that said, you know, the mantra of taking trades, whether you're long or short or whatever it is, you're renting positions, either way, stays intact because that's the type of trading we have. So with that said, you go to the chart of the SPX, you know, you'll see that you know, off the charts we start to change up the pattern a little bit just to show this ascending channel to the upside, where we've been riding this, you know, this trend where the market hasn't been able to get above this end of the ascending channel, and we've been holding, you know, the bottom end. So we're almost at the bottom end, not quite there. Still a tough trade. You know, we've now come in 4 days after the oscillator hit, I think, plus 75 here, which was a great sell signal. You know, if you just sold and reduced there, you're not in jeopardy here. You actually have the luxury of trying to test some things, and now we're actually negative. So we're negative, so we're not oversold. So don't think we're oversold that we have to bounce. But at this point, the market could really trade on its own merits. So with that said, I'll show you the chart of the spiders, which is pretty interesting that we filled the gap from the jobs report on Friday, and then we almost filled the gap from the EU summit. So it almost puts everything back in neutral, but I would say more neutral to negative based on the chart pattern. So if you go to the chart of the spiders, you know, I did come in long the spiders, and I always sell a little bit pre-market. And my target, you know, for the spiders was to get above this 135.77 and fill the gap. So I actually sold the majority of my spiders right around 136, not quite 136.23, but you don't have to get the top. And then when we recrossed below 135.77, which to me is a start of an outside day, if we were strong, we shouldn't have done that. That was my sell. So I got out of the way, and I didn't have to have the pain of this entire move. So, you know, with that said, you know, now you try and just erase this because that was that inside range that was taken out both ways. And you have a pretty ugly candle here. Same ugly candle you had here. This one, I guess, was a little bit more dramatic. This is when Goldman Sachs lowered the target of the SPX to 1285. So question is, what now? So if we go to the Fibonacci retracements, you'll see from here, okay, to the high of this move, the 61.8% retracement held. So that remained intact. So now if we do that again, you know, the question is, can this strong thread, which is what it is, I think, at this point, another thread from this time, from this low here, all the way to the recent high, which was right around there, you know, we're still above the 61.8% retracement. We've given back the 0.38. We now filled this gap that we were trading against, so now this is not that important anymore. And, you know, so this is really it. I would think that IBD puts us back in rally under pressure after this weakness in the size of this day. And one more day like this, they're back in a market correction. So anyway, at this point, you had 2 different decisions to make. You could have sold into strength when the oscillator was plus 75, like we mentioned. And then even on that Jobs Friday, that was your spot to, you know, clean up longs you weren't committed to. And now you're back to tactically trading, or you're just holding onto some macro positions, but nothing more than a tier 1 in this type of environment. You know, if you look at some stocks, there is some strength out there. Target was really unbelievable today. I did that little strategy on Bloomberg on their lunch money show. I said I liked the pattern. What the strategy I think was to buy the 57.5s and sell the what's it called? Sell the 60s. So the net was like $1, and I think today some guys emailed me that they managed the position and they made almost 100% on their options trade. Congratulations. If you're in the stock, in my opinion, looks very good still, even in this bearish type tape. We crossed this last descending channel to the upside near these highs here. So to me, target, looks like something that's in the game still for higher prices. Walmart, obviously a monster, leading the way, but I would not chase it up here. I would hopefully have you reduce positions because it's extended from the 8-day. On the flip side, Lulu continues to be very weak. Stock couldn't really rally again, creating another bear type flag. Those who lean on stocks, I guess if it were to start breaking below this 56.83, you could see continuation to the downside. We've talked about this breakout failure here. We've talked about this earnings gap that could not get filled, so the downside still controlling us here. So this is a weak stock. Under Armour, I would say, is also something that's somewhat broken, and you should not be just going back to the well here. You do have big support, but you have a small little area here that could be broken to the downside. I do not like the way this looks either. CMG, also former leader that is under pressure, and I know it's had an unbelievable run. Guys made super duper money long this for a long time. Here was when it broke this last ascending channel, or not even ascending channel. Yeah, this is an ascending channel. Or last uptrend, boom, retest, sideways, never got back above it. And then look at the size of that day. I remember when I saw it happening, I'm like, what's going on here? And no one really knew. But anyway, this potent down day, still in control of CMG. You have another bear flag coming into play here. This is a pretty big wide range bar to engulf this last thing, this last little range here. So I would say if it starts breaking below 378.17, you have the 200-day. But overall, you look at the weekly chart, it has a long way to go down, guys. So if you're in love with this stock because you've made a ton of money over the course of in the last few years, I would say, cash in, hit the, ring the register, as some people would say out there in television land, especially if it broke below 370. So I would be careful there. As far as some of the banks, nothing really to report. JP Morgan's trying to hold this lower level, showed a little relative strength, still has some room to the upside, I would think. McDonald's gave us a small little trade as it cleared this minor pivot trend here, or pivot or lower pivot levels. Still looks okay. As far as Apple, off the charts last night, we said sell it, or we said it's coming into resistance into this area. That you have a high here at 618. This high here is 620. Today it hit as high as 619.87. So nice spot to take some off. At this point, I'm not long any Apple or short any Apple. I did have it long overnight. I sold some, and then when it recrossed below 614, and it didn't hold it, that was your other, another sell signal. So at this point, I would say if you're there as a macro shareholder, that's fine. But as an intermediate trend trader, it could easily come back and test the 8-day here. So use this little uptrend, or this little ascending little area to trade against. The low here is now 605, below 605. That gets tested, and then you still have this big level going across here, 588, 590. So if the market gets pressured, earnings aren't for a while here. Amazon gross day today, very, very potent downside day. This actually broke this ascending channel. I drew this a few times, and it broke it. So if you were in it for an intermediate trend type of trade and you've been following it, today was your day to sell Amazon. Some guys actually made money shorting it right here. At this point, I think you get out of the way. Earnings are coming out, and who knows what they're going to be like. Last quarter, they were impressive. But again, their valuation is high. I don't know anyone that really has the Kindle. I don't know anyone who I don't know. I don't love their business model. So that's one of the high beta names I talked about early this year that could come into jeopardy. So just be careful if you're going to be long into this earnings report. Gun to head, I might have some puts versus calls just because that's what my gut tells me there. Google failed at the 200-day again. I wouldn't say. I would say at this point, just like continue to know your time frame here. I think it's still in a void. Long term, guys that are committed to it could be trading it versus this 557. They have now missed on this quarter. They reported here unimpressive. Actually, no, it was here unimpressive. So people aren't expecting much out of this stock anymore. So I know earnings are on, I think, Thursday. So we'll talk about that a little bit closer. So all in all, there's a lot of trades out there. Sperling did a great job the last 3 to 4 days, cashing in on the move in the strong stocks. Whereas Evan, waited for his opportunity, and then today pounced on the short and apple. So, play to your strengths here, because there's a lot going on. On the long side, the short side, you have stocks that are strong and you could buy the dip. And then you have stocks that are weak that, are rallies to be sold. I pointed a few of them out, whether it was Lulu or CMG or some of the other ones. So just pick what you're good at, stick with it. It's a summer. Only take the compelling trade. I see a lot of guys trading, one-off type of situations that they've never traded before, and they're losing money and they're giving money back in situations that weren't even on their game plan to start the day. So if you have a game plan and you make money executing it, and then you lose on these one-off news plays because people are jumping into it, don't do that. The money's too hard to come by. So with all that said, it's Tuesday. It feels like a Thursday, but it's only Tuesday. Today was definitely, a gross day, a day that, to take notice. And when you take notice of a day like this, you just have to notice what the next few days lead to. Last time, after that big down day, you had a small up day with, that Goldman Sachs downgraded the market. A lot of a big range from the high to the low today. So if you went out short, just be a little careful. We could hang out here, but then you go back one more time to this SPX chart. Ascending channels typically break to the downside. So we're still following. We're still not here. So we will be looking closely at what's going on here. It seems like they tried to price in second quarter earnings, but our earnings disappointments are still coming in, and I don't know if they have third quarter third quarter guidance lowered priced in, or the fact that 2013 might not be a great year, considering Europe still has a ton of problems, and we also have to ring it in a little bit here because our deficit isn't something to smile about either. So all in all, take trades, don't have opinions, and continue to watch price, because price has been dictating movement and there has been a lot of money to be made. Scott Redler, T3 Live, the recap. See you at the morning call. Have a good night.